morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, there's a lot of excitement outside of the investment world, of course, as we know, general election, the campaigning is heating up, and there is the second wave of COVID taking place in the US. But today we're taking a look at financial results of two companies of particular interest, and we're talking about JMMB Group Limited, where they recently posted a financial year-end results, as well as Prestige Holdings, which should have published some time ago. But we're taking a look at it with a particular focus on the mirror impact it may have as a reflection of what would be occurring with some of the small businesses or what would have occurred in the past quarter. So let's go quickly to our presentation, and turning firstly to JMMB Group Limited. For the full year ended March 31st, 2019, the group reported earnings per share of 19 cents, which was an impressive over 70% increase from the 11 cents recorded in the prior comparable period. Now, we'll take that with a grain of salt. There were a couple significant one-off items included in there. Net interest income was up just around 5% from 416 to 437 million TT dollar equivalent. Overall operating revenues, net of interest expenses, increased for about 19% from just around 850 million TT equivalent to just over 1 billion. Profit before taxes did increase significantly for about 48% from 230 odd million to 340 odd million. And with a lower tax burden, in fact, the effective tax rate for the fiscal 2020 period was just around 2% as compared to the 20% in the prior comparable fiscal year. Profits after tax increased a whopping 82% from 182 million to 332 million. Now, taking a look at the revenue by segment, there's not much change here. It seems like a nice upward sloping trajectory, which is typically good news for investors. We can see net interest income just under 50% of overall revenues, followed by some significant improvements in gains on securities trading, as well as fees and commissions and foreign exchange margins. Now, that being the case, JMMB Group Limited is still trading at its or very close to its IPO or additional public offering level of just around that $1.90 to $1.95 of a trading price. Now, investors may be asking, with the successful acquisition of their share of their significant stake in Sagicor Financial Corporate Company Limited, and generally improved results, why hasn't the share price been taking off? Well, one of those reasons could be that the method of accounting for Sagicor's value by JMMBGL. Now, they have opted to use the equity accounting method, or the equity method of accounting, which allows the firm or the group to carry Sagicor at its acquisition cost, which at the time was just around 1.74 billion TT dollars, and that was way back in December of 2019. Now, since then, there has been a material depreciation or decrease in the listed price of Sagicor on the Toronto Stock Exchange, and that valuation would have fallen from about 1.58 billion TT equivalent on the acquisition date to its current price of just around 0.9 billion TT equivalent, so an almost 50% depreciation in value there. However, the carrying cost of JMMB remains on JMMB's balance sheet remains at 1.74 billion. In fact, they did record a quite significant gain on acquisition of Sagicor, which would, in relative to the market value, be quite significantly different, and that could lead to some testing for impairment, which the management considered and opted not to do in subsequent quarters. So that could be weighing on the considerations of investors of JMMBGL. The other factor that they may be considering is, in fact, JMMBGL's leverage. And in comparison to some of its Trinidad and Tobago Stock Exchange peers in the non-banking finance as well as banking sector, we can see that JMMBGL is on the higher end of leverage at about 9.7 times, and this is just total assets divided by total equity. When we look at some on the lower end, we see Answer Merchant Bank Limited at 3.2 times, so very conservatively positioned, as well as First and Scotia at around 6.5 times. And we can see that at the other end of the spectrum, there's the Republic Financial Holdings and NCBFGs, which have been, like JMMB, in acquisition mode over the past few years. Now, at a price of $1.90, JMMB offers investors a trailing dividend yield of 0.5%, and that dividend uncertainty has been elevated with the Bank of Jamaica's mandate that financial institutions should be very cautious about what they are paying out as dividends. And it offers investors a reported earnings per share or price earnings ratio based on reported earnings per share of 10.2 times, which is below that sector average of 14.6 times. But again, some significant one-offs inside JMMBGL's reported earnings. So as you can see, on the basis of Jamaican economic fragility, that some concerns over the valuation and possible impairments based on impairments that could take place in subsequent periods and have an impact on earnings, as well as that dividend uncertainty. Bourse maintains its neutral rating on JMMB Group Limited. Turning quickly to Prestige Holdings, for its half-year period, the group recorded earnings per share figure rather of a loss of 13 cents per share, which is in stark comparison to that 26 cents recorded in the prior comparable period. Total revenues fell just around 20%, or $110 odd million, from 537 to 428 million. Total expenses fell by a much lower than proportionate 15%, or 23 or 24 odd million dollars. And overall, that loss for the period was $8 million, which was in stark comparison again to that profit recorded in the prior comparable period of $16 million. Now, in terms of revenues and profit before tax margins, we can see that there was quite a significant change. While revenues does not or would not have fallen as dramatically, we can see that Prestige Holdings Limited's profit before tax margins of around 4.5% over the past three comparable periods would have deteriorated significantly, and that would have been driven by to negative 1.7%, and that would have been driven by that closure for the 1 month period during the height of COVID. Now, importantly, the group has taken a lot of initiatives since the reopening to shift sales more towards online purchases and online ordering, which would help, as well as ramped up their marketing and advertising, which we would all have noticed, as well as putting the necessary protocols in there at their locations to ensure a very as safe as possible ordering experience for most of their customers. So on the basis of relatively high valuations, PHL is trading at $8.21 share price per share right now, which gives us a price earnings ratio of just over 43 times, again driven by that loss taken significantly in the second quarter and offering a dividend yield of 1.5% compared to the sector average of 2.3%. So with those relatively high valuations, that dividend uncertainty, economic headwinds in most of its operating jurisdictions, but tempered again by the, let's call it, normalization of operations and the very quick adjustment to this new post-COVID era, Bourse maintains its neutral rating on Prestige Holdings Limited. But that's it for this week's edition. For more information, you can give us a call at 226-8773, or to Bourse, you can email us at invest@boursefinancial.com, or check us out on our website, where all of our research is absolutely free at bourseinvestment.com. That's it for this week's edition. Have yourselves a wonderful investing week. This has been the Bourse Report.